Hey everybody, welcome back to the channel. We are back with another episode of Daily Palantir. It has been quite an exciting week in the world of Palantir, and it's only been 2 days this week. Obviously, Palantir, 26 bucks, pretty exciting. Right now about 25.93 until 1 hour left until after hour trading closes. We're going to talk about it, dissect it, and break it down. If you're new to this channel, my name is Amit. We do a daily video on Palantir every single day. We also do a market open and market close show where we talk about everything going on in the markets. But we have a daily video on the channel about Palantir. Today on the show, we're going to be talking about two things. Number one, we're going to be talking about the macroeconomic reasons, things that are happening external to Palantir, which is causing Palantir stock, in my opinion, to gain some momentum. And then second of all, we're going to talk about the qualitative reasons for why Palantir is running. If you look at Palantir in comparison to some other companies in their sector, the divergence is becoming quite obvious. And it seems like some of the money in the sector is rotating out of those companies into Palantir. And I want to break down a variety of reasons for why I think, following Palantir's 4th annual AIP conference that happened 2 weeks ago, why the market may be starting to get it in the context of Palantir and why they are giving a premium to the stock. So, lots to talk about. Thank you for being here. Let's get into it. Okay, so first thing let's do is pull up the actual stock itself. So as you can see right here, Palantir 25.91 after hours, 25.82. On the day, we peaked up at about 26.03. We were at 22.84 on June 14th, so 4 days ago. Nice move from 22.84 to 26.03. It's a hell of a move we saw. 26.03, we topped out 25.91. We'll see where the stock goes over the coming days. The market will be closed tomorrow, but obviously an incredible move for Palantir. We haven't seen 26 since February, if I'm not wrong. If you look at the last 6 months, yeah, last time we saw 26 was when we hit 27.50 that same time. And this was early March. This was after we got the Titan contract. And the market obviously really liked that. So we ran up to 27.50. Then we came all the way back down to 2020, and we bottomed out right after the earnings, which I thought were good, but the market, I guess, didn't agree. Palantir fell about 25%. And then since then, you know, it's been a journey to come back up to this $26 range. Now, what's happening with Palantir and why are we seeing this momentum? So I think I want to start off with the macroeconomic reasons for what's going on. So if you've kept up with the channel, kept up with the market open, market close show, we talk about the macro every single day. Inflation's coming down. And inflation is coming down pretty aggressively. CPI last week, 3.2 on the headline, Consumer Price Index, versus 3.4, the big banks thought. PPI came in at, I think, 2.2% month over month versus 2.5%, and then negative 0.2% year over year versus plus 1%. So we had enough data. Commodities decreased. You saw airfares come down, used cars, new cars come down. So many different subsets of the economy. Besides shelter, energy was a good one as well. Energy came down aggressively, but shelter is the only one that hasn't come down significantly. A lot of things have come down in regards to inflation. Why does that matter for Palantir? When inflation comes down, interest rates are more likely to get cut. If interest rates get cut, this is good for a company like Palantir. Now, obviously, Palantir has thrived, even though interest rates have gone the highest they've gone in the past 40 years by Palantir pivoting to GAAP profitability. Now 6 quarters in a row of GAAP profitability, $4 billion in cash, no debt. So it's not like interest rates were, aggressively affecting them. However, the business cycle becomes easier to sell into different corporations and enterprises if the cost of capital is lower, and interest rates in general coming down helps the broader market. And from a stock perspective, investors are going to give more of a premium to companies they believe will thrive in that interest rate, in a decreased interest rate era. And, interest rates at 5.5, if that gets down 25 basis points, 50 basis points this year, which is contingent on inflation data, that will benefit Palantir. So the fact that inflation has started to make a nice move down is one of the macroeconomic reasons for why Palantir has done well. Another macro reason, not macroeconomic, but definitely external to Palantir themselves, is NVIDIA. NVIDIA is now the world's most valuable company, $3.34 trillion, $136. It is up 175% year to date, up 43% since last earnings. I mean, it's just incredible. And when NVIDIA goes up, it carries the rest of the AI sector with it. Now, that might not always be sustainable. That might not be justified. Maybe some companies have no correlation with NVIDIA, but they're still doing well. But in general, a lot of investors across the world, and not just retail investors, but hedge funds, are looking at their AI exposure they may not be as obsessed as, we may be with Palantir, but they might say, oh, Palantir, AI name, NVIDIA's up, AI's in a trend, let's buy Palantir, especially if Palantir, the chart is trending upwards. And so Palantir gets more investment dollars just from that perspective. So the technical reason why NVIDIA is actually important for Palantir, in my opinion, is because if NVIDIA has more GPU demand, that means more models are being trained. The byproduct of those models are something like AIP for the enterprise, right? Those models are connected to an integrated ontological system of data. That ontological system of data, which is Palantir's Foundry, is able to use AIP to connect to these models, whether it's Gemini, Llama, GPT, etc., and to provide business intelligence and business results, right? Like that's the entire point of AI in the enterprise being useful. So if there's more GPUs, more training, more demand for AI, the software derivative platforms from that hardware, like a Palantir, Snowflake, Datadog, Databricks, etc., they should benefit. And so far, they haven't really seen the massive tailwind that the semiconductor, hardware, AI infrastructure, cloud, hyperscaler companies have seen. But that might start to be happening. And so in general, I think thematically the market may be giving Palantir a premium given that NVIDIA is also going higher and the market wants to see other AI names also get the benefit. And that's why they're buying their stocks, because they think that earnings are going to reflect what Palantir is, or what the potential of Palantir has when it comes to AI-enabled growth. So those are the macroeconomic reasons. Inflation's coming down, NVIDIA's doing well, that's good for Palantir. Now, what are the risks to those reasons before I get into more qualitative stuff? NVIDIA could flop. NVIDIA could go back to 125. I think Palantir definitely can take a little bit of a hit if NVIDIA comes down. I think the entire market takes a hit and Palantir takes a hit. Number two is that if we get some bad inflation data, let's say inflation ticks up next month, which I don't think it'll happen, but let's say that does, that could hurt Palantir as well. So although these macro reasons are tailwinds for Palantir and they've been beneficial, it could definitely be bad if they go in the opposite direction, which could then hurt Palantir. Now, the qualitative reasons for why this stock is going higher. I have a variety of reasons, but the first thing I want to talk about is Snowflake. Now, we've talked about this on the Palantir Weekly podcast last week. If you haven't checked that out, be sure to check that out. Snowflake, on one of the greenest days in the market, is down 2.35%. Year-to-date performance on the stock has just not been good. I mean, it's been a tough year. Over the past 6 months, it's down aggressively. Year-to-date, 237 now to 124. It's just not been a good stock. CEO left. They had a data security breach the other day. Growth started to slow down. And so Snowflake now $42 billion market cap. Palantir here at a $7 billion market cap. $57.5 billion market cap. This divergence matters for a variety of reasons. The most important reason is that Snowflake and Palantir have historically been compared to each other in a variety of ways. Now, look, are they different companies? Yes. And because they're different companies, maybe it's not fair to always give them the comparison. But at the end of the day, they're both selling software to the enterprise, and they're both trying to convince the stock market that we are AI for the enterprise. I mean, goodness sakes, Jensen Huang literally was at the Snowflake conference recently, and he called Snowflake the AI enterprise, whatever, superstar. And so you've got Snowflake trying to signal to the market, yes, we are the AI data lakehouse that everyone needs to care about. You've got Palantir that's giving you the separate argument saying, actually, Snowflake, all they are is a lakehouse. They're not actually creating an ontology of your data. They're not actually connecting that data to drive business outcomes. They're, in fact, just selling you steak dinners with their software because what they are doing has been commoditized. We are the real deal. Since IPO, the market has believed Snowflake's story over Palantir's story. Snowflake at December 2022, when Palantir was at the lowest it's ever been at $6, was at $150. Palantir is now $25. It's done a 4x from those lows. Snowflake is at $125. It's lower than it was when Palantir was at its lowest point. Obviously, Wall Street lost and retail won, because who was buying Palantir at $6? Retail. Who was buying Snowflake at $150? Wall Street. And Wall Street got this wrong. I don't think Wall Street likes to be wrong forever. And if they think they got something wrong, they will cut their losses. They will be absolutely ruthless about it. And they will divert those funds into the winners, even if they have to pay a premium. So I think there is something to be said about, and look, I do think Snowflake is oversold. I do think this thing could bounce back to 150, 160 because it still will do close to $3 billion of revenue a year. However, if the market feels there is not a significant AI moat in Snowflake, and Salesforce's earnings kind of showed the broader SaaS ecosystem may not be benefiting from the tailwind that is AI yet, that is where the market starts to say, wait a second, if NVIDIA is putting up these numbers and Snowflake's not capitalizing on the overall, momentum that we're seeing with AI because they're not growing as aggressively or whatever reason, maybe we need to rethink our AI thesis on Snowflake. And so I think this is a make or break moment, not only for Snowflake, but for Palantir. Palantir in Q2, and we'll talk about them in future videos, what they need to do in Q2, but they need to crush Q2. They need to show, hey, we are the big daddy in this race when it comes to enterprise AI. And if they do, I believe the market will sustain the premium that they've given them so far, potentially expand that premium, but the market will make a clear identification of who's the winner when it comes to AI. It's not Snowflake, it's not Datadog, it's not Databricks, all phenomenal companies, but it might end up being Palantir. It's going to be ruthlessly competitive. It's not going to be easy, but I think that's what's kind of being set up to happen right now. And look, I could be aggressively wrong and Snowflake grows revenues like crazy next quarter and there's this real AI moat and all that stuff. That is possible, but I think that's the divergence we're seeing in the stock price right now. One other thing on Snowflake, and then we'll move on to the next reason. Snowflake is now developing an open source LLM called Arctic, and their operating margins, they said, are going to be guided to be lower because they're spending money on GPUs and compute to be able to train those models. If anyone in the chat, not in the chat, this is a video. If anyone, I'm so used to live streaming. If anyone in the comments can tell me why the hell Snowflake is building their own model when GPT, Gemini, Llama are probably going to be better than whatever Snowflake comes up with, definitely GPT-5, I'm open to hearing. I don't have an answer to that question yet. And so I think the market's also like, why the hell are you making your own model? Are you just training a model because you think models equal AI equals premium? Because I think the market's calling BS on that right now. Whereas Palantir just had AIPCon, 70 customers from United to Wendy's, AARP, Jacobs, Fujitsu, they all showed up to say, hey, we're using Palantir's ontology, their Foundry software. We're utilizing AIP on top of that. It's working. Here are the results. This is real AI in the enterprise. And so I think from that perspective, the market's starting to call a little bit of BS on what they're seeing just based on people having models. And obviously, that means that they're going to sell off your stock and look for the companies that are actually winning when it comes to enterprise AI. Speaking of AIPCon, here's the next qualitative reason I think Palantir is going up right now. This is the CEO of Tampa General. Here's a minute 37-second clip of him talking at AIPCon during the halftime show about why they renewed their partnership for Palantir, 7 years, $50 million. I think it gives some insights for those that haven't heard this yet, for how special of a company Palantir really is.
A couple of reasons why we wanted to we're leaning in and we've extended our relationship with you another 7 years. One, your people are outstanding.
We agree.
You're smart, you're well educated, you're thoughtful, you do a great job at listening, and you move really quickly. We're a tough customer, there's no question about it. So this is like not a paid advertisement by any stretch of the imagination. It's not. We can be a very difficult customer. One of the things that we struggle with in our industry is we move a little too slow. You act as an accelerant to the work that we're doing. So that's one big reason. Your technology platform is outstanding. And you've already heard lots about that in different industries, and that applies in our industry for sure. You're changing the DNA of our institution. I mean, that's the way folks have to think about it, at least in the healthcare space. You're literally changing the way we think, the way we perform, the way we ask questions and deliver care. So when you kind of put all of that together, and you think about the quality of the people, the quality of the products, the culture and the organization that you've created under Alex's leadership and so many others, to us it was a no-brainer. And we're culturally aligned, which is very important to us. And speed is incredibly important, because in our world, you have to be really good at what you do, but you also have to be really fast at doing what you do.
Absolutely.
And you allow that to happen.
I mean, what an argument, man. What an argument from CEO of Tampa General. You're fast, your people are exceptional, Alex's leadership is something that we are culturally aligned with, and then he says, you are changing the DNA of our enterprise. I mean, at some level, the market has to hear that. And they're like, well, are there other CEOs thinking the same thing? Because if there are, and Palantir is changing the literal DNA of an enterprise, look, you can argue that at $25.80, it's a bit overvalued. I'm very sympathetic to the argument that it can get, 25 price of sales, 200 PE. I get it. Could it pull back? 1,000%. Of course it could pull back. However, if you're in this for the long term, that's what you want to hear. You want to hear someone say, you are changing the DNA of our enterprise. It is so special. It is not traditional software. It's not, hey, let's just take the software, download it, and then use it. It's actually, can we build a partnership and a relationship with our clients that gets them to give to care about us. And if they do, we're going to lock down some $70 or $50 million contracts, which is what's going on with Palantir. Here's another qualitative reason that I think the market's looking at. Argus Research initiates $29 price target on Palantir. This came out a couple days ago, which also has the street likely excited for Palantir.
Let's talk about Palantir. It's getting some love on Wall Street today. Argus Research initiating coverage on the company with a buy rating. $29 price target, just above where it is today on the stock. Now, Argus's price target indicating a potential upside of just around 23% from the company's current price. When you take into account why exactly they are a bit bullish, a lot of the bullish narrative here surrounding Palantir is the AI platform, the AI capabilities, what exactly that looks like here going forward for the company. So again, they're seeing increase of profitability. That's a real catalyst here going forward, that they have expanded their commercial sector with data management analytics platform and the capable here of providing solutions to complex business problems. All that to say, they see more demand here for Palantir's business going forward.
Yeah, and they talk about defense as a potential bullish signal for the stock. And this is exactly what our very own Josh Lipton spoke with Palantir CEO Alex Karp about. Alex Karp saying that AI tech is going to play, quote, a crucial role on the battlefield. That is exactly what this Argus note kind of mentions here. The fact that U.S. defense and intelligence has kind of been one of the primary customers for Argus, and they expect that to continue. And this comes at a good time for the stock, by the way. This is a stock that's up over 43% year to date, up 50% over the past year. So a lot of potential here for that record run to continue for Palantir here.
So Argus Research on the street puts out a $29 price target. Defense deserves a premium. Profitability is exceptional. Balance sheet is exceptional. And they believe more demand is coming in regards to growth, not only from the government sector, but also from the commercial sector when it comes to AI. All the things you want to hear as a shareholder, all the things that if you're a long-term shareholder, you think is probably correct and going to happen and materialize, and all the things the street probably starting to reconcile and say, hey, maybe this is true. Maybe we should start taking it seriously. Maybe we should start buying the stock. So having said all of that, I think the rally is real to $26. Do I see it pulling back to 23? Of course that could happen. Do I see it running up to 30? Of course, I think that can happen. And I know that's kind of like, hey, Amit, where's it going to go? Tell me what's going to happen. Like, I trust your opinion. What's going to happen? Now, the honest answer is that Palantir has not solidified support at $25, $26. I mean, it hit it today, right? Yesterday it touched a little bit. Today it actually maintained above those levels. There's going to need to be a few weeks of data on this stock staying at this level or breaking out above this level for it to legitimately say we're done with the low 20s and we're into our late 20s. I'll be 27 in October, right? I'm 26 right now, so I'm getting into my late 20s. Palantir is trying to figure out how do they get into their late 20s, and the stock price has to prove that for us. Now, in terms of valuation, obviously you can argue that it's a bit overvalued right here. PE of 203, price to sales of 24. Are people probably going to take their profits here? Yes, I'm sure some people take their profits. I think thematically the trend is AI demand is going higher. The biggest companies in the world, Microsoft, Nvidia, et cetera, are continuing to put up numbers. JP Morgan, Goldman Sachs, Evercore, Bank of America, all these guys upgraded their S&P price targets because they believe that the top 5 companies in the world are going to continue to produce earnings results, which is why the answer about Palantir's price is contingent, at this point, quite frankly, on Palantir. And as a company, there's not much more that you can ask for. The short float is non-existent on Palantir. It's like 70 million shares, less than 4% out of 2.2 billion. So the shorts aren't in control of the stock. Palantir is, quite frankly, in control of Palantir's destiny. They grew 21% last quarter. Is that enough growth to justify 24 times price to sales? By all conventional metrics, no. However, they got a $480 million contract 2 Wednesdays ago, randomly, from the military. Now that 480 million is not just going to automatically boost up their earnings, right? That's not how they're going to recognize their revenue, but it goes to show you how diversified the business is, not just from a traditional software SaaS-based offering, but also they can land really big contracts, and that is a moat for the government business, which accelerated to 16% year over year last quarter, over 11% 2 quarters ago. So it is in Palantir's hands, essentially, to be able to crush Q2 and justify a 25 times price to sales and what does crush Q2 mean? Simply put, growth needs to go higher. That 21% becomes 23, 24%. I think the market gets really excited. Now, that's not phenomenal, Nvidia growth at 262%, but with Palantir at a $50 billion market cap, the market doesn't need it to be trillions and trillions of it's not, Palantir's not a $1 trillion company. The market doesn't need crazy growth numbers to justify it. The market just needs 23 to 24 to 25. 25 would be amazing. If we get above 25, goodness gracious, the market will be excited because the market has always been willing to pay a premium for Palantir. All of us as shareholders have always been willing to pay a premium for Palantir because Palantir is fucking cool. It's cool. People like Palantir. It's cool. Like, the CEO is crazy hair. It's cool. People want to own shit that's cool. And at the end of the day, if you're cool, you're winning contracts, and you're growing above 21%, the market's going to continue to think you're cool, and you're going to get a cool premium. And we've seen this happen time and time again throughout history with a variety of stocks. So I think the price action is dictated on some of the macro things we talked about, which are outside of Palantir's control. But if those things are intact and Palantir can continue to grow, yeah, it's very possible that we run up to 30. It's also very possible we come back down to 23. I think either way it's possible. It's now up to Palantir to see what ends up playing out. But that's it. Thank you guys for listening and watching. Hope you guys enjoyed. Leave a comment below on any of your thoughts on the price action and anything you've seen over the past couple of days. Any insights you have on why you think Palantir is doing what it does. Daily email, Substack, dailypalantir.substack.com. Free email newsletter every single day. You can subscribe to that for free and get my written thoughts on what I think is going on in the world of Palantir. And that's pretty much it. Awesome stuff for Palantir shareholders. Let's see what happens in the future. Good price action that you can't really complain about. And now it's up to Palantir just to continue to maintain that momentum. Actually, there's one thing I was going to show. I knew I was forgetting something. I want to play this 30-second clip. I am a nerd and I watch old Palantir earnings calls. Yes, I'm a nerd. I think this is like from Q3 2023. I don't even remember where this is from. But it's Karp talking about how important the company is and how they're building things eternally. So let's watch this one thing and then we'll move on, and then we'll be done for today.
We are very focused on investing in ourselves. We are not as focused on acquiring other companies. We believe we have the right products and/or we will build them. So we are investing in what we do, what we believe are the best in the world. Very little interest in products we see on the market. And so it's really an investment in ourselves, in our talent through changing the compensation, and our ability to retain people by making sure we're focused on a mission that is crazy important to us in the world, in showing our belief with actual real attendees, and running like hell. We are.
Palantir is not acquiring, they are building internally because they know this is their opportunity and they're trying to take advantage of it. If you want to see another video of me going much more in depth about Palantir's culture, given I spent a couple days with the company 2 weeks ago, I'll leave that in the description. Thank you everybody for watching. I'll see you guys on the next one.